Tomorrow is Tuesday, 23rd December 2025, and the Indian market has entered a zone where indecision is no longer sustainable. Today's session ended with Nifty closing at 26,172.40 and BankNifty around the 59,300 zone. These are not just closing numbers, they are pressure points. At these levels, markets do not drift sideways quietly. They either expand with momentum or snap back sharply. Here are the levels that matter immediately. Nifty. Bullish trigger sits above 26,250 to 26,300. Bearish risk opens below 25,900 to 25,850. BankNifty. Bullish trigger above 59,600 to 59,800. Bearish risk below 58,800 to 58,500. And this remains absolutely critical. The first 15 minutes tomorrow decide direction. Because today was not a euphoric breakout day. It was a controlled advance, buyers pushed prices higher, but sellers did not capitulate. Option writers did not run. Volatility compressed instead of expanding. That combination tells us something important. White pointing backhand index energy is being stored, not released. Global market overview, why it matters for India. Let's understand the global context, not for prediction, but for pressure assessment. Global markets right now are not emotional. They are measured. In the US, inflation expectations have softened, bond yields have stabilized, and equities are holding ground, but without runaway momentum. This matters because India performs best when global markets are supportive but not overheated. A panicked global market pulls India down. An overheated global market creates sudden reversals. But a calm, constructive global environment allows India's internal structure to decide direction. That's exactly where we are now. Asian markets are steady. European markets are mixed. No shock, no panic, no forced liquidation. This means tomorrow's move in India will not be imported from global cues. It will be manufactured locally, by banks, by derivatives positioning, by institutional intent. Indian market overview. Today's Indian market session was structurally bullish, but emotionally neutral. Nifty advanced strongly and held its gains. BankNifty participated but did not accelerate. That difference is important. When Nifty rallies but BankNifty does not lead aggressively, it tells us the market is participating. But leadership is still being tested. Breadth was positive. Large caps, select mid caps, and even some defensives participated. This was not a one stock or one sector rally. But it was also not a runaway trend day. This type of session typically appears before one of two things. Range expansion with confirmation. Sharp rejection after failed breakout attempts. Tomorrow's open will clarify which one. Sector performance today. Sector rotation today was clean and logical. Autos and consumer-linked names showed leadership, suggesting confidence in domestic demand. Financials, especially private banks and NBFCs, participated selectively, not explosively. IT joined the rally but remained inconsistent, participation without leadership. Metals and PSUs lagged, reflecting cautious global commodity expectations. This tells us the market is choosing safety with upside, not chasing high beta blindly. That is usually seen when institutions are positioning. Traders are cautious. Derivative writers are active. Again, a pre-move environment, not a post-move environment. Top gainers and losers, what they actually signal. Let's talk about why these names moved, not just that they moved. Top gainers, interpretation. Shriram Finance, strength here reflects confidence in NBFC credit quality and margin stability. This is not speculative buying, it's rotational accumulation. Infosys Wipro, IT strength today is more about mean reversion than trend leadership. Traders are selectively covering shorts, not building aggressive longs. Bharti Airtel, defensive participation inside a bullish market usually signals balance, not fear. Retail and consumption names indicate domestic confidence rather than global dependency. Top losers, interpretation. Select PSU banks and metals lagged because capital is rotating, not exiting. Kotak Mahindra Bank's underperformance inside BankNifty is important, it shows leadership inside banks is still fragmented. When leaders hesitate, ranges tighten. FII DII activity, what matters more than numbers? Whether FIIs buy 500 crore or sell 300 crore is less important than how price behaves. Today. No FII panic selling. No DII exhaustion. Supply was absorbed smoothly. That tells us. White pointing backhand index there is no distribution underway. Markets do not distribute quietly at highs, they become volatile and emotional. Today's market was calm, controlled, and orderly. That supports structural strength, even if momentum pauses. Technical analysis, Nifty. Nifty is doing something very specific right now. It has moved above short-term averages. Approached a known supply zone. Failed neither up nor down. This is called acceptance testing. If Nifty can accept above 26,300, it opens space for continuation. If it fails and slips below 25,900, it confirms rejection. Between these two levels, options dominate price action. Technical analysis, BankNifty. BankNifty is the real decision maker. It is forming higher lows, flat highs, tight volatility. This is classic compression. BankNifty does not stay compressed for long. When it moves fast. Above 59,600, momentum unlocks. Below 58,800, defensive unwinding starts. Everything else in the market will follow banks. Nifty options analysis, spoken market language. Here's what the option chain is saying, in plain language. Call writers are confident, but not relaxed. Put writers are aggressive, but not dominant. Inside the range. Option buyers bleed daily. Writers earn time decay. Outside the range. Writers scramble. Direction accelerates. This structure cannot coexist for many sessions. That's why tomorrow matters. BankNifty options analysis. BankNifty options show even tighter positioning. Both sides are defending hard. Neither side is surrendering. This is the kind of setup where first directional move traps one side. Second move expands violently. This is why waiting is smarter than predicting. Market psychology. Today's psychology was professional. No panic. No excitement. No revenge trading. That tells us participants are aware of where the market stands. Markets only explode when everyone waits. Important news and drivers, contextual. No negative domestic shocks. No global scare headlines. No macro disappointment. This removes downside urgency. When downside urgency disappears, ranges resolve upward more often than downward, but only after confirmation. Tomorrow's market outlook. Tomorrow is about reaction, not opinion. Nifty. Above 26,300 continuation bias. Below 25,900 rejection confirmed. BankNifty. Above 59,600 leadership returns. Below 58,800 consolidation resumes. Watch the first 15 minutes. Then watch bank participation. Everything else is noise. Watchlist for tomorrow, educational, not tips. These stocks are not to buy. They are to observe. Shriram Finance, strength plus volume plus structure. Infosys Wipro, mean reversion behavior. Bharti Airtel, defensive confirmation. Select private banks, leadership clue. Retail auto names, demand confirmation. They will tell you what the market is thinking before indices do. Why markets pause before big moves? Before major moves. Volatility drops. Opinions rise. Options compress. Everyone waits. That waiting phase is not weakness. It is energy accumulation. Today was not the move. Today was the setup. The market is compressed. Options are tight. Banks are coiled. Tomorrow's open decides whether this becomes a continuation or a rejection. No prediction. Only structure. Only confirmation.